all of this black and white stuff and pro-black stuff and stuff like that, if I remember correctly. Because I don't usually like go back and watch and see stuff, but people sent this to me, so I'll pick a content creator every once in a while to respond to. And she was talking about, if I'm not mistaken, and correct me if I'm wrong, about that she had broke up.
Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Lee Rogers Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In Phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, Phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. And that's what you get for thoughting. You should never thought. Somebody said, "Hey, Tim, I thought you had changed your mind about going live." And that's what you get for thoughting. Stop thoughting so much. My bad, Dirty. What you laying down for? Get up, boy. Good evening. How are you? If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty well thank you for always tuning in to Tim's Tidbits. If by any chance you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Araña Grande. They say it on my shirt. You see the big spot on the wall? That just means Big Spider, if you don't hablo español. You're tuned to another episode of the Intraday Price Action Recap. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Smart Money Manuscript is a course that I worked very hard on, and I'd appreciate it if you go buy it. I'm not going to give you any fluff. Just wanted you to buy it. First link in the description below, $69.99. That's all it costs. And you too will be able to, understand what the stock market is, understand what a stock is, understand how to research stocks, understand how to read price action. And when you put all that together, you can make your trading and investments decisions without any fear or ambiguity. That's what the tagline says. $69.99 plus you get a Q&A with me every month on the second Saturday at 12 p.m. Eastern Standard Time, all for the low, low price of $69.99. First link in the description below. Go buy it. Go buy it. I have 2 growing boys here. They eat me out of house and home. I need all the money I can get. Go buy my course. Thank you. Who we got in the chat? Who we got? We got light skinned Deborah up in the Zoom. We got Lump in the Zoom. There's no Zoom link in the YouTube chat because I don't want to add a waiting room where I got to stop and let people in. So I'm not sharing the link in the YouTube chat anymore because we don't want any crank yankers to pull up anymore. We got Here to Learn and Share over there in the YouTube chat, holding down the #1 top fan slot, right? We got Felicia. What's up, Felicia? I ain't seen Felicia in a month of Sundays. I'll be seeing Felicia from time to time over there in Tremaine Trades chat, right? Felicia done ran off and left us, y'all. She found a new community to live in. She said, forget y'all Spider Gang. I don't want to hang out with y'all no more. So she over there in Tremaine Trades Discord. I guess you're in Discord. I don't be in the Discord, so I don't know what goes on in the Discord. I just pop up on the live streams that he be doing. We got Kim over there. Kim says, hey, everyone. Kim says, hey. All right. I will not stop. I will continue to go. Back in the day, there was a man that's my age, maybe a year or two older than me, but he had a catchphrase, and he used to say, "Can't stop, won't stop. Can't stop, won't stop." I would not mention his name because nowadays people, try to make him out to be a very bad guy, and they make me to not. They try to make me not like him, right? But when I was growing up, you know what I'm saying, in the 90s and the 2000s, he was the man. You know what I'm saying? Just like our current president. When I was growing up, everybody wanted to hang out with our current. He was the coolest dude on planet Earth. He had the parties with all the chicks. All the rappers wanted to be like him. All the rappers used to hang with him. And now that he the president, everybody want me to hate him. Do I think he's the best president in the world? No, I think he sucks as a president. But why do you want me to hate him? This was who everybody wanted to be like. Everybody wanted to be like. They wanted to get that money on, just like him. But now they want me to hate him. Why? Why do you want me to hate him? I don't think he should be the president to lead the country. But hey, if all these politicians can't do it, why not let some rich guy take his shot at it? Who cares? Who cares? 4 years, we'll have another idiot in there. And we'll be right back where we started at. And just like they always do, if it's somebody in there, they try to make you think he's the best thing since sliced bread. And as soon as he's not in there no more, they try to make you think he's the worst thing ever. So for those 4 or 8 years, was he really the best thing or was he the worst thing? I don't know. I don't know. Politics. That ain't why y'all stepped in here, man. Can't stop, won't stop. We're going to go ahead and get into this intraday price action recap. I did not do a price action recap. Have I done one this week? Have I done one this week? Light skin Deborah.
No.
I haven't.
No.
Oh, why you said that like that, Deborah?
Haven't seen you in a month of Sundays. Where have you been?
In my skin. Ask me the same and I'll tell you
There
again.
you again.
Okay. Let's share my screen, man. Let me share my screen. Turn your attention away from me. I know it's hard. I know it's hard to stop looking this way because I just radiate with joy and good times. But let's turn our attention to them candles over here. Hello, candles. Hello, candles. I'm not blocking any candles. So I got this little box open over here. Now, if you look at our screen, for those that's wondering, oh, excuse me, that Taco Bell came back with a vengeance just now. I went to pick my son up from school, right? He had practice today. He actually had, it's some band group that he's a part of. They had practice. So when I pick him up, oh, this is my new water bottle, y'all. Right? And yes, Taco Bell. I love it. Ooh, nice and cold. So I refilled it this afternoon. I filled it up this morning. Then I refilled it this afternoon. So that ice probably gonna be in there for the next week and a half. But that's gonna be nice and cold when I wake up at 3 o'clock in the morning. It hit the ice in there. When I wake up at 3 o'clock in the morning, the ice still gonna be in there. So we was coming home. He had like a band group meeting. They had caroling practice because they're gonna go caroling in the month of December. Right? They're going caroling. So they had caroling practice. And so I went and picked them up and we riding home, and as we're getting near our humble abode, let me go full screen. Story time. As we got near our humble abode, he said, because he always got his headphones on, so he got to knock his headphones off when he want to talk. Hey, Dad, you mind talking about Taco Bell? That's how he asked me for stuff. He don't say, hey, Dad, can I have Taco Bell? Hey, Dad, can I have this? Hey, Dad, Hey, Dad, mind talking about Taco Bell? All right, so I said, what'd you say? I heard him the first time. I just wanted just to see if he was going to ask, if he was just going to repeat it. I said, you mind talking about Taco Bell? Yes, son. Cool. So we pull up Taco Bell. I said, what you want? Let me get that 3 taco crunch supreme, that whatever breed of taco crunch, whatever, number 8, with a side of nacho fries and a Baja Blast for the drink. Right. So I ordered his food and then I ordered me something. I forgot I had some Olive Garden in the refrigerator because I had, a meal and a take home. Forgot I had a take home in there, right? So I ordered mine. We get to the window. I said, hey, when you say you got this, you gonna pay for this? Nope. Now, mind you, he ain't say, will you get me some Taco Bell? Or, Dad, can I have Taco Bell? Do you mind? Like, so if I'm riding in a car with another grown person and they say, hey, bro, you mind stopping by such and such? When I stop there, I don't anticipate taking my wallet out and paying for nothing. And the lady at the one, she'll like, now kids ain't never got no money. I tell you, boy. I tell you, boy. Here we go. If you're wondering what the black, blue, and red lines are on the chart, right? That right there is the dealing range, right? Y'all know whenever Mike could talk about stuff, I go hard. I deep dive. I back tested. I forward tested all of that. That right there. Who remembers? By a show of hands, right? By a show of hands, you can do like this. If you're in a disc, I mean, if you're in the Zoom, you can say me. If you're in the chat, you can put a hand up like this right here. But no matter if you say me, put a hand in the chat, whatever you do, I still want you to raise your hand like this right here, right? Physically raise your hand, right? I'm watching you to see if you raise your hand, right? Who remembers the IPTA look back and look forward? Who remembers that? By a show of hands. Who remember IPTA look back and IPTA look forward? Who remember us talking about that? I see one hand. I see a fat pink hand. See another hand. All right. Wait a minute. That hand got the finger spread open. I ain't never see the hand with the finger spread open. 1, 2, 3, 4. And the thumb on. Okay. Man, I ain't never see that. Let me see that though. I ain't never see the hand with the finger spread open. I've seen the hand like this right here. And the hand caught me off guard. Hey, there it is right there. I got that hand right there too. With the fingers, with the finger spread open on it. Oh man, don't tell me they got the little thing. You know when the girls be doing that little clocking thing like that right there? They got a little hand like this right here. Don't tell me that's for the clocking, the little clocking thing that the girls be doing. Yes, that. The little thing like that. Oh man, they get on my nerve. Females be talking, they be like, if you don't stop pinching your little fingers together, clock D's. How about that? Clock D's. Hey man, y'all stop distracting me, man. Y'all now, if to look back, right? So we ain't talked about if to look back at forever, right? So Michael was talking about if to look back in one of his latest videos. This was a beautiful masterpiece of a video, right? Everything this man put out is gold. But if you've been on the journey of following him since he's dropped his, let me go full screen on this, because this is important, right? If you want to, yeah, you have people like myself and you have other people who talk about the ICT concepts. But if you truly want to learn and internalize the ICT concepts, right? My humble opinion is that you need to study Michael's core content playlist. You study that. That's how you learn the concepts. And once you learn the concepts, then you look at his yearly mentorships in order: 2022, 2023, 2024, 2025. Why am I saying that? Because he has laid it out in the way that he designed it to be when he was doing his private mentorship, right? Remember, he said you need at least 3 years. You learn it. That's a year to learn it, right? You tape read, a full year of tape reading, right? And then you back test, a full year of back testing and sim trading, right? So you sim trade, I said back test. Learn it, tape read. While you learning it, you back testing, right? You tape read. While you tape reading, you're looking for what you back tested, right? Then you sim trade it. You're sim trading what you back tested and tape read, right? So 3 years, and then it says And Michelle in here. What's up, Michelle? Tuck up. We got Michelle Tuck up in here, y'all. Right. So watch the core content. Right. 2022. He taught you a one shot model that came out of the core content. 2023, he expounded on how to. 2022, it was just tape reading. So 2020, learn it. 2022 was just tape reading. And like at the end of and during the tape reading, he gave you one model out of this right here. If you was lazy and they ain't want to make your own model. So learned it, tape read it. And then in 2023, right, he was he expounded on how to use it, right? He expounded on how to use it. Then this right here will be your sim trading year. And he's expounded on how to use it because now you're at a place where you should be sim trading. So now he's giving you more detail on how to really refine it. Then 2024, right? 2024, he was just like pretty much trading and showing you what he did because now you've moved past sim trading and he's going into even more detail on how he's actually trading, right? 2025, he's going into even more detail on how he's actually trading. So you learn it, you tape read, you sim trade, and then you just continue developing as you get better and better. Core content, 2022, 2023, 2024, 2025, right? And you have everything you need on how to use ICT concepts. And when you come in here, right now, you can look at the screen as if it's name tags on this stuff. When you put stuff on your screen, you understand why. Why does Tim have those black, blue, and red lines on the screen right there? Right? What is the IPTA look back? Right? Who can tell me the time frames that IPTA looks back for liquidity and inefficiencies? What are the time frames that it looked back? Somebody tell me.
20, 40, and 60 days.
Yes, 20, 40, and 60 days. So IPTA looks back through time. It looks back 20 days. It looks back 40 days. And it looks back 60 days. Right? So when it's looking, so I have this on my chart here because not only, right, not only, as you see, is this our current dealing range based off of price action, right? This is the current highest high and lowest low 20 days back, right? 20 days back. And Michael talked about that. He said, in this video, that was a beautiful piece of work, right? He said, when I come to my charts, even if I've been away from a while, the first thing I do is look for the highest high and lowest low 20 days back, and I grade that range. That's the first thing I do, right? And then once you grade that range, what are you looking for? Looking for the obvious liquidity. You got relative equal highs here and a single low down there, right? All right. That's your buy side, that's your sell side, right? And inside of that range, you're looking for inefficiencies, right? Looking for PD arrays. And more importantly, right, you're looking for inefficiency and PD arrays that line up with these quadrants. Okay. Now, let's take it a step further. Who remembers when Michael first gave us the fancy name Event Horizon, right? Were you in the gang? If you was in the gang when Michael gave us that new fancy term Event Horizon, Put your hand, put a hand in the chat if you was in the gang when he dropped Event Horizon. You can do one that finger spread, or you can do the one like this right here. Either one, whichever one you want to put in there, right? So when he put this out, right? When he put this out, he said, right? Let's pretend like this Event Horizon, because Event Horizon, right? It's the 50% in between two PD arrays. So you got the low of a PD array here, you got the high of a PD array here, and Event Horizon is the 50% in between those two PD arrays. Now, when he talked about Event Horizon, he put it into quadrants and said that from the upper quadrant to the lower quadrant was the area he was looking to engage, right, for Event Horizon, right? This is what he was looking to engage, right? So now hi, thanks. Good to be able to make a live stream. Hey, welcome to the live stream, right? So he mentioned this back then with Event Horizon. And so I caught that, right? I caught that. And whenever I would be making a trade, when I would be looking at trade and Event Horizon type stuff, I would be focusing in between these here, right? Now, what didn't dawn on me until this video that he put out that was just a beautiful piece of artwork, right? Was this is one of the things. Now, I went and I did the Event Horizon thing on everything. And this was before he said it was any PD array, right? I was using it on fair value gaps. Y'all remember. I was using it on new week opening gaps, new day open. I was using it on everything for the Event Horizon type thing. And he came out later and said, Event Horizon is not just in between new day opening gap, new week opening gaps. It's any two PD arrays. Blew my mind. Right now, the one part I heard him when he said it, but the one part that slipped me, right, because he didn't make it as clear. He did, because I remember when I would do Event Horizon, I would just shade this part right here, right? But when he was talking about the 20-day look back, right? He said, when you look at the quadrants for your 20-day look back, from this upper quadrant to this lower quadrant, this is where you are looking to do the bulk of your trading. When the algorithm is trading within this area here, this is where you're looking to do the bulk of your trading, right? Now tell me, when you look at this screen here, right? Where are the sweeping moves happening inside of this little consolidation area right here, right? We got our range, right? We come here, we trade back up, got the big gap up, right? We trade up here, come up into here, use that as support, push up toward the upper quadrant, drop all the way back down to the lower quadrant, come back up, use it as support again, push up to the upper quadrant, come back down, take liquidity, still respecting it there, push back up to the upper quadrant, come back down again to there, use it as resistance this time, drop down to the lower quadrant, take liquidity, come back up, use it as support, push back up to the upper quadrant. All of the trading, I ain't gonna say all, but the bulk of the trading is happening in between that upper quadrant and that lower quadrant during the 20-day look back, the 20-day IPTA look back. It is a beautiful piece of material to study. And this is the same concept, right, that I have been using for Event Horizon. but this is inside of a dealing range. Why is it working the same? You know how I say you can run quadrants on anything, dealing ranges, PD arrays. You can run them quadrants on it. The algorithm understands these quadrants because it understands the open, high, low, close of everything. It understands the high and the low of this dealing range, right? It understands the high and the low of that event horizon. It understands the high and the low of that fair value gap, right? So when you run the quadrants on it, you're going to see those quadrants being used as resistance or as support. Now, let's take it a step further, right? When you see PD arrays, right? Any PD array, it can be fair value gaps, it can be suspension blocks, it can be order blocks, it can be breakers, it can in any PD array that falls on these quadrants, right? We talk about this all the time now. This is something we talk about all the time. This ain't nothing new, right? This ain't nothing new. But these remember we said these quadrants, when you got a dealing range, right? These quadrants are where you can anticipate setups to happen in the future, right? Because when we run these quadrants, it's not for the range that has happened. It's using the high and the low of the range that has happened to give us areas to look for setups in the future. So when we see PD arrays, right? If you're bullish, where are the best setups going to happen? At or below equilibrium. Correct? Correct. Right? Can anybody identify, right? Can anybody identify a PD array, right, that's resting on a quadrant that the algorithm used twice to give you a beautiful long setup? Used it twice to give you a beautiful, and it's resting on a quadrant. And not only is it resting on a quadrant, right? It's a 3-candle pattern, right? The second candle, which is arguably the most important candle of this 3-candle pattern, is engaging with that quadrant level. That's what makes it a high probability ICT PD array. Because that most important candle of this PD array is engaging with that quadrant level.
Is it that 11 o'clock, Sibby?
You said 11 o'clock, Sibby, on what day?
I think it's 11. There you go, right there.
That's a 3 p.m. Sibby, right here.
Oh, 3 p.m. Okay, yeah.
These right, I think these right here are dates.
Oh, okay.
These are days. Those are days. Those are days.
Days, okay.
Yeah. That 3 p.m. Sibby right there. Right. So we have a lower quadrant, right? Remember we said the bulk of your trading is going to be in here. We have a Sibby, right? Candle 1, candle 2, candle 3, right? The Sibby candle itself engages with that quadrant level. That right there makes it a high probability ICT Sibby, because that middle candle is engaging with that quadrant level. And then we look over here. That's a 9 a.m. candle. We look over here. That's a 3 a.m. candle, right? 9 a.m. candle. 3 a.m. candle, right? What's significant about 9 a.m. and 3 a.m.? What's happening around during the 9 a.m. hourly candle and during the 3 a.m. hourly candle? What's happening around there?
The markets are about to open.
All right. So during the 9 a.m. candle, we're getting ready to go into the New York morning. It's so sometime during here, the New York morning session opened up inside this hourly candle, right? The New York session opened up inside that hourly candle. The 3 a.m. candle, the London session opened up inside that hourly candle, right? So during 9 o'clock, right, we got a macro time in there. During 3 o'clock, we got a macro time. So it's a few things we're inside of a kill zone here. We're inside of a kill zone. So there's a lot of things on our, oh, we at here. Come on, Smart Money Manuscript. By the way, this little time is king graphic. It's in Smart Money Manuscript for the low cost of $69.99. You know what I'm saying? You can have that graphic too, or you can just take a screenshot right here if you don't want to pay the $69.99. But I advise you to do so because hey, it's well worth the money, right? London, 3 a.m. to 11:30 a.m. New York, 9:30 to 4, right? Kill zone, right? London, 1:30 to 5. New York AM, 7:30 to 12 p.m., right? You got a kill zone, you got some macros, opening ranges, all kind of stuff. All kind of time right there. Time is king, right? All kind of time values. So you have a high probability SIBI here, right, that we have closed above, right? So now this right here is an inversion fair value gap, right? And if we pay close attention, to this right here, right, that SIBI is the very first SIBI that was created when we dropped right here and took out some sell side liquidity. So you have a very first SIBI that was created and then became an inversion. We already know those first makes it a high probability inversion fair value gap. It's in line with the lower quadrant of IPTA's 20-day look back, right? And the second candle of this SIBI is engaging with that lower quadrant. So first imbalance, second candle engaging with the quadrant level, high probability ICT inversion FVG right there. Now that it's created, when time meets price during the 9 o'clock hour, meets price. Time meets price. Lower quadrant, high probability inverse fair value gap, sweep liquidity. Take out liquidity, displace away, trade back down into the imbalance, deliver to the buy side. Where does it stop? Upper quadrant. Inside our range there. High probability, right time, let's go. Time meets price. Okay, move over here. Right, we're trading down. Come down here. Take out liquidity. Time meets price. Deliver to the buy side. Right, two beautiful long setups based off of that PD array at that lower quadrant, because this is going to be your best trading opportunities, right? Because it's below consequent encroachment and it's right there at that lower quadrant, right, where you're looking for your best setups in between this area here. Beautiful setups. Once happened during the New York, once happened during the London. All right. And you go through and look at the same thing. You got stuff resting on the 50% there. All right. Got this bullish fair value gap where the second candle engages with that. We drop back down into it there, overshoot it a little bit, but the bodies are respecting the fair value gap. Matter of fact, that's a whole suspension block, right? So you got a suspension block resting right there, right here, right here. What time is that right there? What time is that right there? Boop, 9 a.m. That 9 a.m. candle right there. Trade down into it, right? Take out liquidity, 9 a.m. candle, trade down into the suspension block, resting that second candle, touches that quadrant level, time meets price, delivered to the buy side, right? Deliver to the buy side, right? Come back over here, 1 p.m., right? Going to the afternoon session. What happens at 1:30? You start the afternoon session, right? We have another suspension block. Is that a suspension block? Nope, not a suspension block there. There's no gap there. Got a Bessie here. All right, got a Bessie here. Okay. Got a Bessie right there. And we got a breakaway gap down there. Overshoot it there. But we got that PD array resting there. We got inversion fair value gap. They got a Bessie right there. Overshoot it a little bit. Sweep the liquidity. Rally back up. And we got a bullish order block resting on there. All of these bodies right here respecting the bullish order block. Wick doing the damage, right? There. This is supporting price here, right? Go up the order block, respecting the order block. Where's it resting? On that quadrant. Wick come down here, do the damage, take out the liquidity. What time is that? That's the 1 p.m. candle going into the afternoon session at 1:30. Deliver above there. All right. Time meets price. Right? Yes, that's overshooting a whole lot, but where body's telling the story. Bullish order block on that quadrant. Bullish fair value gap on that quadrant. Right? You can even look at this big old mitigation block right here on that quadrant. Right? If we look at the mitigation block, they're just gonna go body to body. Oh, we can do the wicks because it ain't no long wicks. Right? Mean threshold right there of the right came right down close to the lower quadrant, couldn't reach it of the entire mitigation block. High, low, up. Right? Where is it? On that quadrant level. Right there. All these PD rays, mitigation block, fair value gap, bullish order block, right on that quadrant. Drop down, right? Close to lower quadrant of that. Rally back up. Time meets price. When time meets price. All right. It is a beautiful piece of work to go back and study. Shout out to everybody that was on the watch party when we watched it live. All right. Shout out to everybody that was on the watch party when we watched it live. So, right. That's why this is here. Yes. We were looking at this area before. Right? We was looking at this area before. Why were we looking at the area before? Because that was the huge drop. That was the huge drop that came into play on that Friday, right? So we was watching this area here because we were still trading inside of it, right? But when we came, I just come here. This is Monday, all right? Come there and we look 20 days back, starting right at the beginning of the week. right? We're coming into a new week. So we looking 20 days back, right? And 20 days back, right? Counting that, well, let's come here. Because we looking for after Friday, because we counting Friday. So Friday, so that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. Right there. Well, we got it to right there. Right? It's 20 days. Right? Because we want to count Friday. So we need to put it 1 day past that Friday. Right? When you're stretching out your info tool, because it'll show you, see 20 bars right there. That's letting you know you're going back 20 bars, right? But you want to have it 1 bar past. So if you're looking at, like, just imagine this candle one at the close of today, right? At the close of today, that candle's not there, right? You can come in, right? And if we start with today, right? Right? And we, but if we want to count today, we have to put it 1 day past it, right? Because now you're going 1, 2, 3, 4. You see what I'm saying? So now this right here, that's your 20th day right there, because you're counting today, right? And when you look 20 days back, right now, it's still that same range, right? That same dealing range. Okay. Now, before, we was just looking at this range because we were still trading inside of it. But now, after watching that beautiful piece of bean footage, we now know why we're still watching this range, because it's the highest high and lowest low within the IPTA 20-day look back. It's the small details that you want to pick up on when you're watching the beautiful bean footage that Michael be rolling out, right? Because he's giving you the little gems on how to use his concepts, the concepts that he codified. You want to know why am I putting this on my screen? Y'all hear me say this all the time. Why are you drawing that line? Why are you reaching for that tool? Why are you looking at that fair value gap? Why are you looking at that breaker? You don't want to just go looking for it everywhere. You want to have a reason for pointing this stuff out. All right. All right. Now, if you look over here, I don't know how good y'all can see that, right? Because I'm kind of in the way of some of the stuff. Maybe if I turn off my camera, the people on YouTube can see, right? I don't know how good you can see it, but I got some stuff over here inside of my, with my TDA, right? These are my tools that I've been, because if I come over here and click on that, and where is it? Right here, 20-day look back. See, 20-day DR, that's 20-day dealing range, right? I peeped how we dropped today at 10 a.m. and stopped a little bit past Friday's 10 a.m. open. It wasn't an accident. Y'all know I like seeing 10 to 10, 6 to 6, 8 to 8. I love seeing that, right? So if I turn it off, right? See, this is where my TDA and stuff is over here, right? I got a lot of stuff in here. Everything's not showing, right? I just show certain things when price gets near it. Why is that? Why do I keep this stuff over here in these folders? Who know why I keep this stuff in these folders and I just turn it on and off, right? Why do I keep it over there and turn it on when price gets close to it? What does Michael say?
PD arrays don't never go stale.
PD arrays don't never go stale. They never go stale. So if it's within this IPTA look back, right? If it's within this IPTA look back and price is trading near it, you want to be aware of it. And then when time meets price, you're looking for opportunity, right? And then even if you don't understand what the draw on liquidity is, if you look for the signatures, price will show you where it's going. Because if price does this, then it should do that. But if you understand we are bullish. If you understand we are bearish, when time meet price, you can get some beautiful entries. But if you don't know the draw, wait for time to meet price, and then look at the signatures on the lower time frames that the algorithm is giving you, and you can get some very good trades, right? Without even understanding the draw. Okay. So we're going to drop down. We'll go down to 15 minutes, right? If we go down to 15 minutes, right, y'all can see some other stuff has shown up on my chart, right? This is stuff that I was looking at today. Now, if you was on a tape reading session, a lot of this looks very familiar to you. The only thing that probably doesn't look familiar to you right now is this right here, because that wasn't there when we did our tape reading session. Right now, you can't see everything because there's a lot of stuff, right? This regular trading hour buy side from the PM that was there, because if you look over here, it says buy side liquidity, regular trading hours PM, that was there. Y'all know why we marked that. I don't know if y'all can see this little vertical line right here. There's a vertical line right there. That's our 7 a.m. That's our pre-market open, right? We got sell side liquidity from the PM regular trading hours. Y'all know why we marked that out. We got the pre-market sell side here. Y'all know why we marked that out. We said our pre-market high was right around our midnight. So we didn't mark. Did I delete my midnight line again? I think I done deleted my midnight line. I be doing that all the time. No, I didn't. There it is. Right. We said our pre-market high was right here at midnight, because this is the, and if you don't understand what that is, this is the 7 o'clock candle right here. And then where my pre-market go? Oh, right. So this is the 7 o'clock. This is the 7 o'clock candle. That's the highest high after 7 o'clock right there. And it's right there at the midnight open. So I didn't mark because I didn't want another line there. Right. And then we have, I think that's all right now. The only addition that I added in there, right, would be this, right? This dealing range here. If I click on that, it says dealing range intraday draw, right? And then if you look down here, right, this is sell side liquidity, regular trading hours from Friday in the PM. I didn't put PM on there, right? But it's Friday PM, right? So what makes that my intraday draw, right? What makes that my intraday draw? Okay. Remember when we was on the live stream, right? Right. When we was on the live stream, while we was on, if you was on the live stream this morning, right? When we were trading here, right? At the 9:30 open, right? We dropped down here, came down to this upper quadrant there, and we rallied back up, right? We rallied back up here. Now, when we rallied up here, we said that this bullish Judas swing here, if price is bullish, because we were saying that price was what we started out saying, intraday price was in a sell program, right? We were saying that the daily time frame, we had got a bearish break in market structure, but it was respecting bullish order flow, right? So the daily time frame still in a bearish dealing range, but it was respecting bullish order flow. Okay. Intraday, we said that we were in bearish order flow, right? Bearish order flow because we was in a sale program. All right. We said we were not breaking the sale program. And we said this bullish Judas swing here at 9:30, if price was bullish, right? we would want price to find support after getting this bullish Judas swing and continue up. But we said that this bullish Judas swing, since we was in a sell program, could actually be the start of what? What did we say that bullish Judas swing could be the start of, since we was in a sell program? Wig snatcher, very good, right? We said that this bullish Judas swing right here at 9:30 could very well be a wig snatcher, right? And when we came back down here, right? So we came down, set that low, pushed up, took out that high. That's our bullish Judas swing. And we came back down and took out that low right there. That gave us our wig snatcher right there, right here on the closure of this candle here. You didn't even have to close. When we offered that price right there, that's our wig snatcher. This closure is just what? Little gravy on there. Yeah. Let me ask you a question. Right? Y'all see this right here now? Okay, now bear with me. Let me go to regular trading hours for a second. Regular trading hours. All right. Come here. Right here, when we drop down, right? This is our bullish Judas swing here. Right? Now remember, when we was in there, we said we got a liquidity void here. We had some sell side there, and we had some internal sell side here, and then we had sell side down there, right? This right here is our afternoon low, and this is internal liquidity from our afternoon low, right? This is stuff we pointed out, but we didn't mark it out at the beginning because we were still way up here, right? We identified this liquidity void and all that, but here, as price is breaking down there, right? Where is the liquidity? Right? Yes, we have a AM low right there. Right? We got an AM low there, but that AM low there, that's right there inside of a liquidity void, right? We don't have an actual low right here, right? The low is there. The low is there. There's our low right there. This right here is from Friday afternoon at 4. That's not the low of the afternoon. That's the low of the afternoon right there. That candle right there. That's the low of the afternoon. Afternoon starts at 1:30. This is the 1:30 candle. That's the afternoon low right there. Right? So when you're coming down here, where's your liquidity? Right? We're already below, right? We're below Monday and Tuesday afternoon low right here. We're already below those, right? What's next? Friday's afternoon low. All right. There's your liquidity. Why are you here? That's the liquidity right there. That's why I mark that as the intraday liquidity. Why? Well, that's the first liquidity that we get to. Yeah, we got liquidity down here, but I'm looking at the first one we come to, right? This is internal, right? That's my low. This is the same afternoon. So this is the lowest point of this afternoon. That's my low. Now, what do we say? When we mark out these ranges, we're marking out these ranges for opportunities in the future, right? So now, let's back up a little bit here. All right, we're going to back up a little bit. Right, let's come right here. Right there. Why am I coming there? Right? Why did I come right there? Why did I come there? Right? Before we talk about this, right, we're going to clear him out. He's not there yet. Right? Why did I cut off the price right there? Who can tell me why I cut off all the price except that candle right there? I already talked about it. Who was listening? Who was paying attention? Come and talk to me. I'm waiting you to give me the answer. I'm listening to you speak. Oh,
What's the question?
oh my God. Who was actually listening to me? who was actually listening to me when I asked the question? I said, why did I cut off all the candles except for that one right there before I'm getting ready to put on my projected dealing range? Why did I cut off all the candles up into that one right there? I already talked about it. I spoke about it before. What did that candle do? Right. I'm getting ready to talk about why I picked that high and that low to mark out my dealing range. So I said we mark our ranges not because of this price right here, but because we're looking at this for opportunities in the future. So I removed all the candles from the future. Whew, they're gone, right? But I left that candle right there. Why did I leave that candle? What did that candle do? Right? What did that candle tell me? And since that candle is there now I can say, oh, this is my draw. What did that candle do? We talked about it already.
Is that the BOS?
Nope. Nope. That it wanted lower. What did the candle do? How do you know it wanted lower? How do you know?
It swept the low on both sides. It swept that swing low, and it swept the low on the gap.
Nope. We talked about it already.
It broke.
Nope. We talked about it already. Let me give y'all a hand. Can y'all see the chat over there? Can y'all see the chat over there? And blow it up big. If you look at the screen, if you look at my screen, can y'all see the chat over there? I can't make it any bigger. Oh, I'm hitting the wrong thing. Can y'all see the chat right there? There you go. That was our wig snatcher. That was our wig snatcher. Right? So the wig snatcher, what did the wig snatcher do? The wig snatcher confirmed that the bearish order flow was still intact. Right? The wig snatcher confirmed that the bearish order flow was still intact. So now that because remember now, when we traded down into the daily fair value gap, I don't have any quadrants on the daily fair value gap, but we came down into the daily fair value gap. We rejected back up, right? We came up, right? Got a bullish Judy swing because the 930 opened here. This was the high at 930. We came down, got the bullish Judy swing. We said this bullish Judy swing, right? If we fail to get supported by this wick right here and go up that bullish Judy, because when we got the bullish Judy swing, we said we're watching to see if this is going to be a wig snatcher, right? And we were like, okay, we're watching this for bullish tendencies. Right. But if we fail to see bullish tendencies, and if we take out this low, boom, that's a wig snatcher. Once we get the wig snatcher, go ahead.
So that was only just a 2-candle wig snatcher, correct?
It don't matter how many candles.
No. But I'm asking. That was just a 2-candle wig snatcher.
On this 15-minute, yes.
Okay. All right. That's why I'm getting confused because I anticipate a lot more.
No, that's why I said it don't matter how many candles it is. It's about what it's doing, right? So when we open here, we came down and we took out sell side liquidity, right? We trade below a low. All right. We trade below a low here, right? Drop down, and then we come back up. This is the highest point that we've traded after 9:30. This is our 9:30 open right here, right? This is the highest point we traded after 9:30. So we drop down, take out a low, right? We trade back up, right? Matter of fact, we traded down below the pre-market low because I got it on regular trade now. Let me go to regular trade now. It's there, right? So we drop down here, take out a pre-market low right there, trade back up, take out the highest high we've made since 9:30 right there, right? So you take out sell side, you take out buy side, then we immediately reverse and take out sell side again, right? So it's not about, it's just 1, 2, 3, 4. You know what I'm saying? Because right now we got on this 15-minute time frame, you got 1, 2, 3, 4 candles, right? So it's actually like 4 candles, but it's not a lot, right? So you're going here, here, there, right? It's about what you're doing. Sell side, buy side, sell side, right? You're sweeping the liquidity on, you're going in the direction that you really intend to go, right? Get people in short. That's right. Reverse, snatch their wigs, right? Because you come here, they get short, they put their stops above the high, right? Come back up, snatch their wigs. People that's bullish, force them in long, they're put their stops below the low, turn around immediately, take them back out, right? Force in, take out, force in, take out. That's the whole wig snatcher right there. You're looking at what you're doing, not how many candles it take to do it in, but what you're doing. Because if it plays out over an hour and a half, you're going to have a lot more candles, but it's about go to sell side first, take out the buy side, take the sell side back out, right? That's what it's about. All right, we tracking. That makes sense, Marco?
Yes, sir. It's just short-sightedness on my side. You understand? But
Yes.
that was excellent because when you were talking about it earlier, I'm like, I don't see it because I'm expecting to see like a range. But you're right, it's just 2 candles. It doesn't matter whether it's 2 or 100.
Yes.
It's just got to take the low. So, that's good because now at least I'm aware not to be so just zoned in on things that I think it is and just follow the price.
Yes. Now, and then when we're looking at liquidity, okay, I'm glad I can help shed a little light on that for you. When we're looking at liquidity, right? When we come into our New York session, right? What are we doing? We're focusing on New York session liquidity first. All right. So when we get our wig snatcher, right? When we before we even got our wig snatcher, we pointed out the fact that, right, this was our regular trading hour low from yesterday. This was our PM low. This was our PM high, right? And we said that this right here was our morning low from yesterday, right? We pointed all that out, right? Then we said we have other lows down here. We got internal sell side there, and then PM low down here, right? While we're pointing that out, because these are our New York session liquidity. And then we got, I'm saying, other liquid, because we talked about this here, was like, I'm not marking this out, it's too close to this, but we're going to remember that this is a AM high, is close to that, right? I don't want to mark all these lines. We're just remembering this is the regular trade in our liquidity. So if the algorithm starts engaging in we know what we're looking for. We got targets, we got stuff we can target. Once we get the wig snatcher, right? What did we say our liquidity was? That was our internal liquidity, and that was our PM low, right? So if that's our internal liquidity and that's our PM low, right? Where am I gonna mark my range? Deal in the range, intraday draw, boom, right? This is my low when I drop down, right? I came here, traded up there, right? This is my highest high right there after 9:30. Drop down. This gave me my wig snatcher, right? So I'm going from my highest high, right? And I'm targeting my liquidity, right? I didn't use the PM low because this low here is right next to it, right? So I just used that. Putting it on the PM low, you're not wrong for that. But since they are right there and this is the lowest low in that area, that's why I picked that. But it's only like 1 or 2, maybe a point or so away, right? So that's why I picked that right there. All right. If you put it on that low there, I got it locked. If you put it on that low there, right, it don't make a whole lot of difference in your dealing range, right? So the low is 829 even, and that one there is 33 and a quarter. So that's like what, like 4 points away, 4.25 points away. All right. So now we got our dealing range, right? We got our dealing range. Okay, now that we got our dealing range, for right now, I'm not gonna go back to electronic trading hours because well, I can go back to it helps see everything when I don't, right? So I go back to electronic trading hours, it don't matter, right? So with electronic trading hours, you can see all of this stuff over here, right? Like all of these candles here. All right, but for what we're talking about, it really ain't important to be on electronic trading hours. Now, when this candle dropped down, right, and gave us our wig snatcher, right? This candle dropping here, what is that giving us the possibility to create? This large expansion candle right here. What is that large expansion candle giving us a possibility to create? Talk to me.
A civic?
Yes. It's closing with the possibility of creating a SIBI this big, right? It's that we are closing with a possibility to create a SIBI that big, right? Now, I'm going to go ahead and put the meat back on the bone because I just took that off so that we can see why, you know what I'm saying, I picked that dealing range, all right? So let's put the meat back on the bone, right? And then now, when the next candle, when we said we close with a SIB, with the possibility of creating a SIBI this big, right? So the next candle opens up, trades up, and then drops down, and it closes right there, just below the upper quadrant of our, it closes just below the upper quadrant of our overall 20-day look back dealing range. But more important than that, right? We said that this was our wig snatcher there created there. And then that right there gave us a SIBI. Do anybody spy anything that's particularly interesting about the location of said SIBI? Can anybody see anything that's particularly interesting about the location of that SIBI? Anybody see anything? Yes. Yes. It's on a quadrant. A quadrant of what? If I click on this right here, that right there is the dealing range of our intraday draw on liquidity. The second candle number 1, 2, 3, that created a bearish fair value gap, right? After our wig snatcher. This right here is an efficiently delivered area. The candle that gave us our wig snatcher left that area. This now becomes what? a balanced price range because we left that area. Okay. Now we have a SIBI. Candle 2 engages with the quadrant. This right here, right? We drop down here to there. If we come from where we came down here, close there, right? Let's say we went down. Let's say if we went down first. We don't know if we went down first, but I'm saying even if we went down first, right? When we come back up to when we left that balanced price, this the candle that left that balanced price range, right? Where is this SIBI residing? Where's that SIBI residing? Right there. Can anybody see that? Where's that SIBI? Where is it resting at? Even if we went down first, but we're not even going to say we went down first. We're just going to go there. Right. So our SIBI, where's the SIBI? Hello? 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 Is you working? Where's the SIBI residing?
But you're looking for the discount.
The
SIBI is in the discount.
You say the SIBI right here is
well, I wasn't looking. Well,
this is our range.
Well, that's right our here. Price range. Okay, that look like the premium up there. Then.
Okay, so the SIBI is in a premium, right? So we got the SIBI. This is the
I thought
SIBI.
You were circling something down the
right
little
here.
lower up under
right?
that. Yeah,
the SIBI is in a premium, right? So now you have a SIBI that's in the premium of this expansion leg, and it happens to be overlapping with a quadrant where the second candle is overlapping the quadrant. That makes it a high probability ICT SIBI. What does price do? We retrace back up. If we went down first, we touched that quadrant, right? We touched that quadrant, traded back up to that quadrant into that SIBI right there. What time is this candle here? 10:45. What happens inside the 10:45 candle? What happens inside a 10:45 15-minute candle? Who can tell me? Matter of fact, let's go down in time. Let's go down to 5 minutes. All right, let's go down to 5 minutes to help ourselves out. All right. So now we come over here, right here. On this candle right here, that's a 1050 candle right there. What happens at 1050? What happens at 1050? Talk to me.
But when the micro starts.
The micro start. We start a micro.
We gonna call it a macro. It's a macro time.
Right. So we got us a micro right here. Right. What is a micro? A micro is a very important time. See right here, macro windows. Time is king. Come on, Smart Money Manuscript. Right. New York AM, 10 minutes, that's 40 minutes, 10 before and after the hour. So 10 minutes before to 10 minutes after every hour, aka 9:50 to 10:10, 10:50 to 11:10, 11:50 to 12:10, right? So at 10:50, time has come into play, right? Time has come into play. Time meets price, right? Right? We rally up here, come all the way up, and we reprice in the entire imbalance, right? But time meets price. What do we trade back up to? That quadrant, right? So here we opened up, dropped down, rallied up, quadrant to quadrant inside our dealing range, right? So we go from consequent encroachment up to the upper quadrant, right? So this right here is the lower quadrant. This right here is equilibrium. This right here is the upper quadrant, right? Remember, this is the area there where we're looking for the opportunities. All right, we just talked about this on the IPTA 20-day look back. Time meets price, high probability, ICT PD array, drop it like it's hard. Right, come down, take out that low there. Right, take out that low there. Then we come back. We got a SIBI right here. This SIBI is touching the quadrant line. Remember that quadrant line that we closed below over here? This SIBI is touching that quadrant line, right? The second candle of that SIBI is touching that quadrant line from our intraday dealing range, right? We trade back up, coming right here. This 545 5-minute candle that's going into, right? That's going into our macro time. This is our 50 here. So time is meeting price, right? So go in there, up back down, 1205. This is 1210 right here. So right here, we come back and we touch it one more time. We touch it here, like this right here is going right before the macro. The macro starts. We drop back down, right? During the macro, we trade back up into it one more time. Time meets price, right? We drop down, trade up one more time, add insult to injury, right? But we don't trade above any highs here. One more time, drop it like it's hard. Take out that low, right? We drop all the way down, trading below the lower quadrant, right? Come back up. We hang out there in between the low of this daily fair value gap and that quadrant, stand in between this area here, right? And then eventually going into the afternoon session, we trickle our way down and trade into that sell side liquidity, right? Right there. That's the sell side liquidity. That's the low of our intraday dealing range, right? And once we hit the low of our intraday dealing range, right, then we start to mount up a retracement, right, back up into equilibrium of our dealing range, right, back up here to the low of that daily fair value gap, right? And we close out the day right over here somewhere, right? We close out like the 4 o'clock session over here. Then we close out the 5 o'clock session in the same area, right around there. All right, come back up. But you see how we were talking about the quadrants of the overall dealing range, and we were saying how it's laying PD arrays, right, on those quadrants of the overall dealing range. We looked at it here and here, how it used that PD array twice, right, on that lower quadrant, right? And then we saw an example of today, intraday time, right? Once we got our wig snatcher and we mapped out our draw on liquidity, right? We had already talked about this could be a possible draw, right? Because we was in the sale program, and then we was looking at this as the draw for the buy program, right? Once we got our confirmation of the sale program being intact, mapped out our target, algorithm sets up a PD array on that upper quadrant. Why? Because this is where the best sales are going to occur, right? Give us another opportunity right here at the consequent encroachment and the upper quadrant of the higher time frame, right? And then delivers into the sell side delivery. So we saw it from a bullish perspective over 1, 2 different days, right? Traded in there on last Tuesday there and last Friday there. 2 different opportunities based off the higher time frame. This is our 20-day look back. So you had an opportunity on Tuesday there. You had an opportunity on Friday there, right? So bullish examples there. And then we saw an intraday bear example here. Exact same thing. Oh my goodness. Boy, if y'all ain't get something out of this, I can't help you. Do anybody got anything for me? Do anybody got anything for me? That's all I gotta say. That's all I gotta say. Yep. Awful quiet. I guess ain't nobody got nothing for me, right? Let him cook. That's what my kids used to say. The young folks used to say, let him cook. Whipping the work. Whipping the work. Is my camera off? Oh, my camera off. I'm sorry, y'all. Y'all couldn't even see me whipping the work. I forgot I had turned my camera off. There you go. Whipping the work. Hey, man. That's it. If ain't nobody got nothing for me, we're gonna go ahead and call it. I'm gonna go for
I'm good. I ain't got no question. I think I'm ready to trade.
Hey, man. All you need is to open high, low, and close. That's all you need.
I think I'm ready.
Cuz Ben told you that. Cuz Ben told you that. All you need is to
Because
open high,
all
low,
you need is
close.
to open high, low, and close, and you good. Uh-huh.
Tell Sister-in-law I said what's up.
Yeah. Brother-in-law. Best brother-in-law in the world.
All I heard was best brother-in-law in the world. It was kind of far away.
Yeah, she's standing back there in the background.
Yeah, I heard it was like, yeah, that brother-in-law in the world. It was like coming through real choppy because it was like far away. I heard all I needed to hear was best brother-in-law in the world. That's all I need to hear.
That's all that's important.
That's all that's important. That's it. What's up, Sharoni? I know Sharoni though.
Yeah, you already know.
I already know Sharoni though. Stomach probably hurt from eating them pastries.
She ain't even eat the pastry with me today, man.
Cause she ain't
was
want that.
acting
She already
funny.
know. She's sick of it. She's sick of you getting her sick. Getting all
Actually,
that.
I was trying to put on something new. She hadn't had the guava and cheese. She
That's
only
why,
used to
hey,
eat the straight taquino.
that's it. You trying to hit her with something new. Trying to hit her with the flim flam. She ain't with it. Sharona ain't with it. Hey, man. I hope y'all got something out of this, man. If you ain't getting none out, I'll try again next time. If you want to learn how to, you know what I'm saying, read candles like this right here, right? You got a course for $69.99. Smart Money Manuscript. All in one place, one-stop shop. I also got free playlists on my YouTube channel, right? You go through the free playlist. The free playlist is a lot longer. The Smart Money Manuscript from start to finish. If you watch every single video back to back to back to back to back to back to back, I think it's like roughly 2.5 hours, right? The YouTube playlist, I got several playlists talking about ICT concepts, trading futures, whatever, the art of reading price action. All these talk about the same thing, right? And you can look at those for free. Or you can go to the Smart Money Manuscript for $69.99, and you got quizzes to test your knowledge, and you get to talk to me once a month on the second Saturday at 12 p.m. Eastern Standard Time and ask whatever questions you want to ask. Right? First link in the description below. Hey, man, that's all I got. Hopefully, y'all got something out of this. If this was your first time tuning in to Tim's Tidbits, you probably ain't here no more. All right? So, till the next time I decide to get on Al Gore's internet and share my thoughts on this complicated thing that we call price action. It's your boy, Timothy Lee Rogers Sr., aka Aranya Grande. That just means big spot if you don't hablo español. Y'all be safe out in these trading streets, man. Gone.